The traditional definition of ESG has an emphasis on the E, that is, climate change and net zero carbon emissions targets. While there has been some progress, adoption has generally been slow because climate targets are aspirational in nature. With timelines in the order of 2030 to 2050, implementation is slow. This is where we can learn a bit from human psychology. Typically, we can expect that the emotion we get from losing a dollar is twice greater than every dollar earned in the financial markets. Similarly, the propensity to take action is twice as large when there's a need to act rather than just a willingness to act. This is why change requires a burning platform. And this is where the new ESG comes in. The new ESG, Energy, Security, and Geopolitics, creates the burning platform, or the need to act, for the world to act faster to invest in green transition energy projects. The biggest challenge for net zero climate targets is the capital investment required to develop renewable and transition energy systems. The second challenge is the inflation that may be created by these large-scale investments and the climate restrictions on, for instance, coal as a source of energy. Energy, security, and geopolitics solves both these issues by offering the ideal narrative for the people around the world to come to an agreement that governments can create more debt to support green infrastructure projects and tolerate higher for longer inflation to support the new green transition energy systems. For example, not everyone would be willing to tolerate double the petrol price if the world reduced its reliance on coal as a source of energy. It is easier to tolerate such a price increase if it can be justified by the necessity of energy security and resilience. And governments can justify going further into debt by explaining that investment in green infrastructure is a necessary investment for the future. Therefore, this new ESG based on energy security can enhance the efforts of the climate change initiatives by adding the imperative to act to the willingness to act by the world to invest in green energy transition infrastructure, such as in renewable energy sources, in solar, wind, hydrogen that are alternative to traditional sources such as in coal, oil, and gas. In addition to the strength of Singapore as a safe haven for wealth, the industrial companies in Singapore can ride on this climate transition and energy security megatrend to be a key pillar of growth in the Singapore equity market. Our industrial companies are both builders and owners of green transition assets. The shipbuilding sector, for instance, is now pivoting towards developing wind energy, carbon capture, hydrogen, and other alternative fuel solutions, whilst the utilities sector is looking to own and operate these assets. Under the banner of energy, security, and geopolitics, governments will be compelled to accelerate spending on green transition infrastructure. This creates the large and sustained demand opportunity for industrial companies in the Singapore equity market to thrive. My name is Kenneth Ong. Thank you for watching.